Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 9th of February 2025, and we're providing our regular weekly update for the week ending the 7th of February. Gold soars to brand new highs, and silver also rises to highs not seen for a number of months. Can this momentum continue? Well, to find out, let's take a look. Now, before we look at the financials, may we ask that perhaps you give this video a thumbs up, and most certainly, if you haven't done so, do subscribe to the channel. We're asking this at the start simply because we know that most listeners listen to about 3/4 of the video, but not necessarily all of it, and so as a result, asking you early hopefully will gain a better response. Gold rose $63 last week, rising from $2,799 to $2,862, having hit a high of $2,887 and a low of $2,773, a rise of 2.3%. Gold spread between high and low was $114. Last week we predicted gold would trade between $2,750 and $2,890, which it did comfortably. In sterling terms, gold rose £50, closing at £2,317, and in euros it closed up €67 at €2,775. Silver rose 37 cents, rising from $31.47 to $31.84, having been as high as $32.74 and as low as $30.80, a rise of 1.2%. The difference between its high and low was $1.94. Last week we predicted silver would trade between $30.50 and $32.75, which it did almost exactly, and closed comfortably within the middle of that range. In sterling terms, silver rose 41 pence, closing at £25.75, and in euros it closed at 30.89 euros. That's up 0.32 euros. Gold to silver ratio rose 1 point, from 88.9 to 1 to 89.9 to 1. Bitcoin currently stands at 96,800. That's down $2,700 on the week. But as we know, in Bitcoin's case, a move of that magnitude is neither here nor there. US equities broadly down except for the UK one. The Dow Jones down 241 points, closing at 44,303. The S&P 500 down 15 points at 6,025. The Nasdaq Composite down 104 points at 19,523. But the UK FTSE 100 index was up 27 points at 8,700. Oils were lower. Yes, Brent crude down $1.01 at 74.66, and WTI crude down $1.53 at $71. The dollar index too was down, but albeit marginally, down 0.33 of a point at 108.04. Now, regarding economic data coming out of the United States last week, we saw manufacturing PMIs marginally lower. Lower automobile sales for January by just over 1 million, a stronger than expected ADP employment report with 183,000 new jobs, and marginally lower services PMIs. The Fed also held its funds rate at 4.25% to 4.5%, even though we in the UK saw a fall of our interest rates. The US employment report published on Friday was lower than expected, with 143,000 new jobs compared with expectations of 169,000. That said, though, the unemployment rate fell from 4.1% to 4%. Hourly wages, though, rose from 0.3% to 0.5%. That's a little concerning because of the potential effect of wage push inflation. Now, this coming week, we have CPI figures being announced on Wednesday, with expectations of the year-over-year rate falling from 2.9 to 2.8, and the core rate moving year-over-year from 3.2 to 3.1. Thursday, we have the Producer Price Index for January, and on Friday, retail sales for January. No doubt, though, all eyes will be on Jerome Powell's comments to Congress on Tuesday and Wednesday, as well as closely watching the inflation data. Now, gold soared to new highs last week, partly because of escalating trade tensions, the inflation risks associated with tariffs, and a degree of uncertainty over Federal Reserve policy. Concerns regarding a potential China-US trade war added to this upward momentum. It has to be noted, though, that purchases of the physical metal declined in India and China, and the Perth Mint have announced its lowest gold sales in 10 months. There is a danger that the rise in prices could have a negative effect on demand, thereby potentially causing a significant pullback when the trade fears and inflation fears dissipate. Equity markets on Friday broadly took a 1% hit because of such fears. That said, depending on what Jerome Powell says this week and the CPI data, gold short-term still looks a positive bet, though at some stage profit-taking will have to appear. Now, last week we said silver is being affected by the same economic conditions as gold, and if gold rises, we can see silver surpass $32.30 quite easily and try and stretch to around $33. Well, gold did rise, and silver stretched as far as $32.74, easily surpassing $32.30, but fell back a little towards the close on Friday. The metal remains well supported by industrial demand and safe haven flows, but the Federal Reserve's cautious stance on rate cuts, stronger than expected wage growth, and rising Treasury yields have slowed its momentum. Silver will perhaps this week be most influenced by the CPI data. A hotter than expected inflation figure could reinforce the Fed's cautious stance, pushing yields higher and the dollar higher, while pressurizing silver. On the other hand, a weaker reading could increase rate cut bets, which currently stand at a 70% chance of a cut in June, thereby making silver more attractive. So, we can expect some interesting moves again this coming week, both geopolitically and financially or economically. So where do we forecast gold and silver this coming week? Well, it all hinges on Jerome Powell and inflation. Do not be surprised if both metals move quite sharply in either direction. Our best estimate for the moment is continuing momentum upwards, but we will expect a reversal in the not too distant future. So, we forecast gold to trade between $2,810 and $2,930, with $2,775 and $2,950 as outliers. Silver we expect to trade between $30.80 and $33, with $30.25 and $33.25 as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you give this video a thumbs up, subscribe, press the bell sign so you're notified of our videos as and when they're published. Pop on over to our sister channel, Finances Do Matter, and let's look forward to a particularly, hopefully, profitable and successful week ahead.